5 seconds to the open. Ready?
Who wants to get this thing started right about now?
Welcome to Follow the Money Weekly with your host, Jerry Robinson.
Welcome.
Not just some guru.
Oh, really?
Your host is an economist and a best-selling author.
What an interesting news item. I'd better write that down.
And just someone who likes to make money and help you to make money. Welcome to Follow the Money Weekly. And here he is, Jerry Robinson.
Hello there, friends. Welcome to Follow the Money Radio, where you can find us online at followthemoney.com. All kinds of free information there we've created over the years just for people like you who are looking to make money online, make money from the stock market, whether it's from trading or investing. We have all kinds of resources there for you awaiting, as well as having membership levels there that you can really dig deeper into each of those topics and go much, much deeper down the rabbit hole, finding different types of income strategies that will work for you and your situation. So really encourage you to go to followthemoney.com, and I want to welcome you to today's podcast. And in fact, I am joined by someone who I have not had with me on the show in, it's probably been at least, almost 2 years, I guess. And it's my lovely wife, Jennifer. Jennifer, welcome to Follow the Money Radio.
Thanks, Jerry. It's really good to be back. I was on the podcast a while back, but stopped coming on the show because I kind of got busy with having a couple of kids, and that took a lot of my time. But I'm back, and it's really great to be back. And it's good to have a feminine touch, right?
Yeah, it is. It's great to have you here today. And I know that you came armed with lots of questions. You know, we get questions from all over the place. Since we launched our website back in 2010, we have received, that's been pretty much the main thing, is we just receive questions. You know, questions from people who say, look, I hear what you're saying. I've read your book. I've heard your podcast. I've, joined your website. And they just have questions. And I think, the questions are probably the most important thing, because it helps people, especially on the podcast here, learn. They get to learn from other people's questions. And so I know you brought a handful today. We'll try to get through as many as we can in this segment.
Yeah, that sounds good. So the first question is from Jason in Minnesota. And this is actually a pretty common question that we get a lot. And so that's why I chose this one to bring on the show today. But Jason asks, what books would you recommend to new traders who are just getting started, Jerry?
That's a fantastic question. And, it's so funny because you had told me that we had received this question and to be prepared for it for the podcast. And literally right before we recorded this, I got this same question again from a fellow named Victor on LinkedIn. And so I thought it was so interesting. We do receive this question a lot. Let me tell you some books that I particularly think will help the new trader or investor really solidify some important facts in their mind and some good strategies to keep you on the right side of the trade. The very first book I want to tell you about is, it's a book by William J. O'Neill, and I'm a disciple of William J. O'Neill. He's the creator of the Investor's Business Daily newspaper. He also runs the IBD 50. You're probably familiar with that. It's a list of 50 growth stocks, 50 top U.S. growth stocks that, often just really outperform the market. So knowing about that list is really helpful. And of course, you have to subscribe to his magazine to get that list, or to his newspaper. But he wrote a book called How to Make Money in Stocks, a Winning System in Good Times or Bad. And this book is unbelievable. I mean, it really is. I think it's indispensable for the trader and for the growth investor. And it's filled with charts. In fact, one thing you'll notice about smart traders is that they understand the power of being able to look at a chart and understand what they're looking at. So the ability to read charts is just, pounded into your mind as you read through this book. He also spends a lot of time going through his can slim strategy. And his can slim strategy is something that he has become known for. It's kind of a way to figure out how to find those good top growth stocks. It's a method. And the book actually begins with just about, I don't know, probably 100 or 200 pages of just straight up, that's about 100 pages of just straight up charts from winning stocks. You know, it's from studying the good that you can really discern the not so good. And so whenever you're looking at a chart, you want to be able to say, I've seen this pattern before, or I've seen this develop on a chart before. And by studying great charts of successful breakouts, successful stocks, then you're going to be ready and prepare yourself for those opportunities when you see them on a current stock, on a stock chart that you're looking at today, perhaps. The second book I would recommend to you, so otherwise I would run, not walk, to Amazon and pick up a copy of How to Make Money in Stocks by William J. O'Neill. Another book I would tell you about is Nicholas Darvis's book, and it's a really gimmicky title. I'll give you that. In fact, I didn't read it for a few years because the title was so gimmicky. I thought this can't be a good book, but it was called How I Made $2 Million in the Stock Market. And Nicholas Darvis was actually a dancer, Hungarian by birth. And he stumbles into the stock market in a very unusual way. I won't spoil it for you. But he stumbles into the stock market and goes on to begin making money by doing something very unusual. He puts money into stocks that are breaking out to new all-time highs and new 52-week highs. And he couldn't believe that as he bought these, they kept going up. And he discovers the same thing, of course, that William J. O'Neill discovers and many other traders like Jesse Livermore and Bernard Baruch and others throughout history who've discovered that when a trend begins, you really wanted to ride that trend, you know. So many people think, well, you got to buy a stock whenever it's at a 52-week low. You know, it has to be really, really beat down, then you buy it. Well, you know, that may be a strategy for some people, but some of the top traders in history have done the exact opposite. They buy when stocks are strong and getting stronger, right? So that's a really powerful book. By the way, Nicholas Darvis came up with this kind of strategy called the Darvis box theory, and we teach that to our members. In fact, we've done some teachings. Any of our platinum members can go in and search for the Darvis box theory, and you will find that we have that in our website, and you can watch several videos we've done on that topic. It's a really powerful strategy, especially for new traders. Let me try to squeeze in one more book here, Jennifer. We have time for one more book. Let's do The Battle of Investment Survival by Gerald Loeb. Gerald Loeb was a trader back in the 1930s, 1940s, 1950s. He was an accountant by trade, and his book really approaches the stock market, I think, in a realistic way. He sees the battle for stock market profits as like a real battle. You know, he admits that the stock market is a brutal place, and that if you don't go in with your fatigues on, if you don't go in with your battle gear on, you're going to get knocked out. And so in his book, he spends a lot of time talking about the defense approach for a trader, and spends a lot of time just breaking down some of the most, what you might consider mundane topics. But when you really drill down, you realize this is the kind of stuff that traders and investors need to know. And by the way, Gerald Loeb was a huge influence on William J. O'Neill, who we just mentioned, his book, How to Make Money in Stocks. So anyway, those three books, How I Made $2 Million in the Stock Market by Nicholas Darvis, How to Make Money in Stocks by William J. O'Neill, and The Battle for Investment Survival by Gerald Loeb. I recommend all three wholeheartedly.
Yeah, and we'll have links to all three of those books in our show notes, by the way, so you can check those out. And also, for those who are coming to the Follow the Money Summit this month, May 25th and 26th in Fayetteville, Arkansas, we will have these three books plus 9 others that are Jerry's top recommended books for stock traders, new, beginning, intermediate or advanced traders. These are these three that we mentioned today, plus 9 others, we will have available for you to purchase at the summit, and they'll be at Amazon.com pricing. So we're not looking to make money out of these. We just want you guys to be able to look through them in person and pick up a copy right there on the spot if you'd like to. So let's move on to the next question, and it comes from Aaron in Utah. Jerry, he says, I have been listening to your show for about 3 years, and I just recently became a bronze member. That's great, Aaron. Welcome. I saw something you put out recently about 4 ways to invest in China. Now, I believe he is referring to our recent Pro Trader Mastermind Group session, which is a stock trading strategy session we hold every Friday morning. Last Friday, it was about 4 simple ways to invest in China's growth. And so that's, I believe, what he's referring to. But anyway, Aaron says, my question is, Jerry, which Chinese stocks do you like and why?
Okay, so Aaron just cuts right to the chase. He wants to know which ones to buy. That's good, Aaron. Well, listen, my thesis on China has been the same for quite a long time. I believe, and if you read my book, Bankruptcy of Our Nation, I believe that America is just on the downward slope. I know that's hard for people to stomach. I know it's especially hard for people who are super patriotic to envision. And this is what I wrote about in the Bankruptcy of Our Nation book, was the fact that it was going to be psychologically punishing to see our country in descent, and that many people would just live in denial of it. This is what we've been saying. This has been our message for a long time. And the inverse, or the flip side of that, is the fact that China is the beneficiary. China is the one who is rising in the twilight of the American, what we should call probably the American experiment. So and when I look at America today, I see it, and I think I just even tweeted out about this on Twitter. I said, America right now is like in that Fat Elvis stage. I mean, Fat Elvis, I'm an Elvis fan. I love Elvis in the 1950s. I love Elvis in the 1960s, even the corny movies. I thought it was fun, but when we get to the late 70s or the mid 70s, Elvis is just paranoid, right? Why? Because he's drugged up and he's fat and he's broke, and he's doing things that he doesn't want to do just so he can make money, and he probably despises life. I mean, it's a really bad scene for Elvis toward the end of his life. And so that's why I say America is really just in its Fat Elvis stage. And that's where we are. We're very paranoid. We're drugged out. We're broke. We're literally bankrupt, and certainly paranoid. I mean, paranoid beyond all imagination. And so, that's why I'm bullish on China. Those are just some of the reasons I'm bullish on China. There's obviously many more fundamental reasons within China itself and within the global economy itself that can promote my bullishness. Now, regarding the stocks, well, that really all depends on what your goal is, and of course, I'm not a financial advisor, but I can tell you a few of the stocks that I like for sure. When you look at China, there's a couple of sectors I'm not crazy about. First of all, I'm not real crazy about the financial sector in China. I'm also not real crazy about the real estate sector in China. So when I invest in China, I tend to focus upon the technology sector. I also like the consumer sector. So let me just throw out a few names of stocks that I've invested in that I like. One is Baidu. Baidu is the largest internet search engine in China. And of course, it's like Google, so it's making lots of money off advertising revenue. And it's a huge company. They're making lots and lots of money. There's another company called, by the way, Baidu is BIDU, is the ticker symbol. There's also NetEase, ticker symbol NTES. This is a internet content company that I like a lot. I've spent a lot of time researching this company as well. And so NetEase is one that I really like. Also Weibo, ticker symbol WB. This is a really interesting company. If you dig down deep, you'll see that it's a fast-growing company. There's another one more I'll mention here while we're at it, and that is TAL Education Group, TAL. TAL is the ticker symbol. This is a private tutoring education company in China. Right now, education is everything in China, and it's really how the middle class is trying to separate itself as it's growing. And so to have your children learn more than you, of course, is of course a dream for many parents. And in China, it's becoming imperative. So TAL is focused upon STEM. They're focused upon science, technology, engineering, mathematics, and they're just making money hand over fist. It's unbelievable how much money this company is making. And so those are just a few of the companies that we like. If you're a member, of course, you can get access to much more beyond the front page of our website in the login section in the members dashboard.
Yeah, that's exactly right. And you can go to followthemoney.com and learn how to join our memberships. It's right there on the home page. I think our resources that we provide in the membership really put individual traders and investors in a whole other category, an elite category, really, because with the heavy lifting work that we do on the back end and our systems do, our profit tracker system, we provide you with such amazing investment and trading research that it really puts you in a whole new category as a trader or investor. And so you can go to followthemoney.com. You can see all about how to join the memberships and what all is included in the memberships right there on the home page. Okay, so the next question, and we'll probably make this our last question for today. It comes from a longtime gold member. I mean, probably one of our earliest members that we've had, and he's a gold member now. It just came in this morning, actually, Jerry, by email, and so I haven't got a chance to request that I use his name yet, so I'll withhold the name, but it's from a longtime gold member. And he says, Jerry, every week I am amazed at all the information that is packed into the Robinson Report. I often wonder to myself, how did they get all that info? There seems to be so much going on in the stock market. It is so easy to get bogged down and frustrated. How do you do it? What is your secret? How do you keep up to date on all these current events?
Wow. Well, that's a good question. And whoever this person is, they're definitely right. There is so much going on in the stock market, and it's so easy to get bogged down and frustrated. There's no doubt about it. Let me tell you one thing. First of all, I stay up to current events by staying off of the blogs, right? I stay away from a lot of the noise that's online, and that has helped me make money. This is something that many people don't know. If you study the great traders, and we're going to talk about this at our summit, upcoming summit, but if you study many of the greatest traders of all time, their success is relative to their distance from Wall Street. In fact, it's almost uncanny that the closer a trader gets to Wall Street, the less money he makes. And the further he gets away from Wall Street, the more money he makes. Isn't that ironic? You would think by being in the action on Wall Street, involved with all of the latest things that are happening, that it would give you an edge. But in reality, William J. O'Neill, Nicholas Darvis, Gerald Loeb, Bernard Baruch, and he's kind of an exception, Jesse Livermore, they all learned this story. They all learned the story that there's too much noise. There's just literally too much noise. And I think that's what the Robinson Report is all about. We put it out every single Sunday evening. Sunday is the day that most investors and traders are sitting down, looking over their charts and getting ready for the new week. At least me and many of the traders I know, Sunday is the day. Sunday evening, you're sitting down, you're looking at your charts, you're planning out your strategy, you're thinking about the week. And so we release the Robinson Report at that time. So at the time you would typically be doing that. So it's fresh, it's ready to go. And of course, we have a platinum version and a gold version and a silver version and a bronze version. So it all depends what member you are, how serious you are, how much information you really want. And so the Robinson Report is, as you mentioned, it's jam-packed with data. So we really drive past a lot of the opinion. We don't focus on what is someone thinking about these markets or what's the latest opinion about these markets. We don't follow opinions. We don't care about opinions. They're a dime a dozen. You don't care about opinions. I don't care about opinions when it comes to the market. What does it matter what somebody thinks? What we trust is the price and the volume. We trust the chart. We trust what the market is doing. So people can be saying, this is going to happen to this stock, or this is going to happen to this particular ETF, or we think this is going to happen to oil or whatever. Okay, that's fine. But until the chart actually begins to confirm that direction, then it's just literally an opinion. And to invest based upon that, every wise trader has discovered over time, that's a bad idea. That's a really bad idea.
Jerry, that reminds me of one of our platinum members just wrote in about a week ago, And he prefaced his question and said, "Now, I know that Jerry always says we shouldn't listen to the quote-unquote noise out there." And then he proceeded to ask a question about what someone was saying about the status of Bitcoin and, what's going to happen to Bitcoin. I won't mention who he quoted. It's probably someone most people would recognize on this podcast. But basically, I had to answer him. That's your preface to the question was the answer to your question. Don't listen to the noise. Follow the trends. Use the actual data that's actually happening, not opinions.
That's hard to do because, people are influential and there's many people who have good reputations. And so when they have an opinion, it seems like, well, they're probably going to be right because they've been right before. And so that's understandable. What many people don't understand, though, about opinions that are coming out of these Wall Street types is that every single one of these guys who are issuing opinions, they have a trade. They have a trade. So if they're short China, guess what? Guess what they're going to tell you in the public? They're going to tell you that China's going to crash, and they're going to try to pick out every single possible negative story about China and amplify it. And therefore, so you're not really looking at their account. You're not noticing that their account is rising as they're saying these things. You're just saying, oh, this guy has a great reputation, and he's saying that China's going to crash. But you're not realizing that he's got a trade on, and he's making money if you'll listen to him and follow his advice. You see, so most, and I'll say literally, I'll go out and say, put my neck out here and say, most of the opinions that you hear coming out of Wall Street are just like that. They're guys who have a trade, and then they're trying to convince you to take on their trade, right? Now, here at Follow the Money, we try not to give out all these different opinions, right? We try to give you data. We try to give you access to understanding how to read the charts for yourself. And we try to downplay any kind of reliance upon opinion. But that's not to say that, some opinions may not be right. We don't want to say that. I don't want to throw the baby out with the bathwater. But I think the main thing is that most people know how to listen to opinions, but most people don't know how to read a chart. And so until they all know how to read a chart, maybe listening to the opinions isn't the best strategy.
Yeah, that's a great point. And thank you, by the way, for your questions. And for those who are not members yet and who are not receiving the Robinson Report every Sunday in their inbox, you can go to today's show notes, followthemoney.com. You can click on the show notes and download a recent copy of the Robinson Report and check it out. See if you would like to become a member and start getting that amazing report, which this gold member was absolutely right, that it's packed with so much amazing information every week. And so if you'd like to have your question answered on a segment of our podcast, you can email us at info@followthemoney.com. Just let us know that you'd like it to be mentioned on the podcast, and we will try to get to as many of those as we can. You can also send it on our Facebook page or on our Twitter page, and you can find all of that information on followthemoney.com.
Do you promise? You mean you really come back and ask more questions?
I promise.
Oh, my goodness. I know many people love hearing Jennifer on the podcast. I really appreciate having her today. We are out of time for segment 1, guys. Let's move on to segment 2, which is Tom Cloud. He's going to be here with an update on precious metals. He's going to be talking to you about the real price that you pay for your gold and for your silver, the real costs, not just the upfront cost, but also the holding cost and then eventually the selling cost. Many people don't factor all that in. Check it out on the other side of this break. Hold tight. Hey friends, Jerry Robinson here from Follow the Money. Are you ready to learn how to trade the financial markets? Or are you ready to take your current trading to the next level? I want to show you how to trade stocks, commodities, currencies, and options for consistent profits. If you're ready to learn, I'm ready to teach you. In fact, we have created a very powerful trading software and education system that provides you with entry and exit signals on every US-based ETF and stock. Our powerful system allows you to identify the current trend in any US-based ETF or stock with high probability entry and exit ideas. You can use our software on any device, and you'll also get access to ongoing live trading coaching videos. And right now we are running a very special deal for all new Platinum and Gold members. Become a member today and start a 7-day free trial. Check out our system Take a test drive and see if it's right for you. Simply go to followthemoney.com/subscriptions and choose either the gold or the platinum plan, and then start your free 7-day trial today. followthemoney.com/subscriptions.
Follow the Money Weekly presents your precious metals market update. Here's Tom Cloud.
Market's kind of slow. We don't look for a breakout right away, but the way it's building and consolidating and just sitting there around 13.13 to 13.15 for gold and around $16.50 an ounce for silver, I just continue to recommend accumulation. But what I want to do today is doing this on Wednesday, May 9th, 2018. I had a writer say, I wish you would say what day you're doing it, where when I catch up, I know what the time frame. So hopefully this will help a little bit. But let me get right to real stories, because this is important. About 3 years ago, a client called and priced up with us and priced with another firm that is a very respectable and good firm. And I said, so they're one quarter, 1% lower on the front. And I said, they charge you a back end to sale. We don't charge a back end fee. So you've got to look at a round trip when you're talking about buying. You need to know what it costs you to get in, what the company's going to make, they're selling it to you, what they're going to charge you to get out, if there's commission. Now, in our case, we fully disclose we make 2.5% on gold, 3% on silver. We pay the shipping and insurance, and when you go to sell it, we charge you nothing. So this call comes in literally today and says, and it was over 9,000 ounces that were purchased. So now they're going to charge them $1.25 an ounce, over $10,000 to liquidate the silver. That if they had bought it from us, they would have no back end fee. And overall, we just got through figuring it, they'd be 9.25% better off if they had bought it from us and paid 0.25% more on the front than buying it. So this is unbelievable. And it's what I've been telling people, because we sincerely haven't done this 42 years. I do this because I say sincerely, God wants me to do it. The reason I'm still working and loving it is I feel that's what I'm supposed to be doing. And I feel good every time we sell something to somebody and we can give them 100% of what we get. And nobody else does that I know of. I also had a call last week, and they were saying, have you ever looked on the internet at such and such company and how many complaints they have? They said, we looked on the internet and National Numismatic Associates has 0 complaints. And so we looked at this other, they had over 233 complaints on the internet for the very things as misrepresentation, calling the premium, putting their commission in and calling it a premium, when by definition, we've talked about many times, when you buy something from us, you pay spot plus premium, what costs me, plus our commission. So to get your final price. And these big companies, telemarketers say, the premium on that this week is this. Well, it's really not. It's a premium plus their commission. So we're just trying to help you get ready, because let me promise you, I've been doing this 42 years and we're going to have the biggest move next time. And I don't think it's far away with the gold cryptos being developed. We're seeing central bank purchases out the gazoo. We've just joined the pool. If you are a $100,000 or more investor, you need to call us about a no charge for storage program we have, but it's $100,000 minimum. But give us a call if you want to talk about that. And then certainly we have the lowest storage fee in the world. My little company can give you the lowest storage fee. We do not mark up storage like other companies do. We want to get you lowest storage in the world with no markup, and that's what we do. And then when you sell it, there's no charge. And then lastly, I want to just touch on this gold-silver ratio for the ones of you who haven't been around it your whole career like I have. There's different ratios out there. When people say you should buy silver, when the ratio gets above this, and you should sell silver when the ratio gets below this. So let me go through them real quick because I don't have time to elaborate on them. But there's the ones out there that believe 16 to 1 is the real ratio. And to go back, and that's the 32, when gold first started trading freely back in 1971 and 72, gold was at $32 an ounce and silver was at 16 to 1. And that's the way it started out when gold was allowed to trade in the free market again. Then you go up to the 32 to 1, and that is gold over just a dollar, a silver dollar for a dollar, even going back further. So then you come up, the one that we see used the most is 50 to 1, where in 1980 we saw gold get 800. It actually got higher during the midday, but closed at 800. Silver was at 50 during the Hunt brothers. So that was 16 to 1 on that. So you had that ratio, and then of course you're going up to the 50 to 1s that we've seen during 2000 to 2012, where gold would be at 800, silver would be at $16, then silver would be at $20, and gold would be at 1,000. And now we see it at a little over 80 to 1. Everybody's saying, throw your gold in and buy silver. And certainly it's unprecedented. And there's no doubt in my mind that it'll adjust back toward a 50 to 1, but not a 16 to 1, in my opinion. 32 to 1 is possible if silver really takes off when there is a bank foreclosures and bank collapses and all these kind of things that are coming down the road that we think due to derivatives will happen. But certainly gold right now could go to as much as 100 to 1, because if you look at the last 27 months, gold's gone up 27% in 2016 and 17 in 4 months into 2018, where silver's only gone up like 8% during that same 27 months. So with central banks buying, and we, just in my little company, we've seen more seven-figure sales through April this year than any year since 2008. I can tell you from our statistics. So we're seeing the big investor has it figured out. It's the little guy that's still scared to death to put his money into gold and silver where there's very little risk, and put their money into stocks where there's a tremendous amount of risk. Not to say stock can't go higher, because they can. But certainly when you look at the price earnings ratio and other ways to evaluate stocks historically, they're at a very, very high price right now. And certainly with the Federal Reserve telling you they're going to raise rates probably 2 more times, and you sit there and look at bonds going down, and people just sitting there knowing the Fed's probably going to raise rates at least 1 more time and probably 2 more times, guaranteeing you a drop in your bonds. So while you sit there in them, I can't figure it out, but that's between you and your money manager. But anyway, I hope today helped settle, because you need to do your due diligence and find out about pricing and what your real cost is of getting in and getting out to make a wise decision how to use your money that God's entrusted you with here on this earth. So with this week's Precious Metals Market Update, this is Tom Cloud signing out.
Hey friends, this is Jerry Robinson from Follow the Money Weekly. Recently, we have been receiving many emails from our listeners commenting on the great help they're getting from our precious metals expert, Tom Cloud. Gold and silver are excellent hedges against the growing threat of coming U.S. inflation. Who's your gold guy? Make it Tom Cloud. With over 30 years' experience with precious metals, Tom will answer all of your questions. Don't buy your gold and silver through some call center and pay inflated prices. Call my good friend Tom Cloud and speak directly with him and get all of your questions answered. For a limited time, Tom is offering free shipping and insurance on every gold and silver purchase made by our listeners. Call 800-247-2812. And when you do, tell him that Jerry Robinson from Follow the Money Weekly sent you, and he'll throw in that free shipping and insurance on your entire order. Call your gold guy, Tom Cloud, right now for the very best deals on gold and silver coins. 800-247-2812. That is 800-247-2812. One of the most important factors for a trader or an investor to understand is greed. Our desire for more should be rightfully distinguished from the actual money itself. Money is not evil. Money is amoral. It neither intends to build or destroy. Intentions are derived from a higher place, from within the hearts of men. It is the steward of the money who wields the power to invoke the forces of good or evil. To complicate matters, we live in a generation today that worships money. The love of money runs deep in the Western world, indeed throughout much of the world. The lust for more material possessions is only satisfied, at least in our day, by more money. What is greed? It is wanting more money for the sake of having more money. Wealth creation for the sake of itself will always disappoint. King Solomon explained this well in his highly unusual book, the Book of Ecclesiastes. Not all traders are greedy. Such a blanket statement about the members of any occupation would seem to be just as inappropriate. Hollywood glamorizes the million-dollar trader lifestyle in several of its films. The internet has helped perpetuate this image of a trader who earns all of his money from a beach chair in Maui while sipping on Mai Tais. That may sell books, but that's not very realistic. This is not to say that successful traders do not enjoy immense benefits from their activity in the markets, only that the average successful trader is a husband or a father who wants to provide a comfortable lifestyle for his family and who has a plan to do it. He isn't looking to buy a yacht. He doesn't even dream of owning a fleet of planes or a private island. He just wants to earn enough so that his wife can stay home with his children. He's a father who wants to earn enough money from the financial markets to put his child through college. She is the retiree who has too much money sitting in cash and is seeking a way to boost her income with a small portion of her nest egg. They're people like you. The only difference is that they invested the time required to learn the trade of trading. Once you learn the basics of trading, you will be armed with a powerful new income-producing ability that you can use for the rest of your life. That isn't greed. That is strategic financial speculation with a purpose. A greedy trader is never satisfied, and he always wants more than he has. He often stays in a winning trade too long. A wise trader, on the other hand, operates according to a trading plan. He enters and exits the markets not on a whim, but with a larger purpose in mind. You will be less susceptible to the noxious power of greed by planning your income goals in advance. Get a pen and write down exactly why you want to trade or invest. What is the purpose? Is it to create a second income? If so, fine. What is the purpose of having a second income? Is it to put your child through private school? Is it to generate capital to invest in real estate to prepare for retirement? Is it to help you pay off debts? When you crystallize your purpose, you are lighting the pathway that leads to your trading success. And that's just something to think about. Remember, friends, when you want the truth, just follow the money. Have a safe and prosperous week, and we'll see you right back here next time. Until then, God bless.
All of the information contained on the Follow the Money podcast is strictly for informational and educational purposes. It should not be construed as specific investment advice. The views and opinions of our guests and sponsors, including Tom Cloud, are their own and do not necessarily represent the views of FTMDaily.com or Robinson Media Group, LLC. Jerry Robinson does hold an insurance license and at times may offer consulting on life insurance and fixed retirement income products. Follow-up, individualized responses to email or phone requests that involve the rendering of personalized investment advice for compensation will not be made absent compliance with state investment advisor registration requirements or an applicable exemption or exclusion and applicable insurance regulations. Past performance is not indicative of future results. You should be aware of the real risk of loss in following any strategy or investment discussed on the podcast. Remember, never do your financial planning through podcast or radio. It's your money. Be wise. Do your due diligence and always consult a trusted financial professional before making any financial decisions.